If the IRS just assigned a revenue officer to your case, this is no longer routine automated collections. This means your case has escalated. Depending on the situation, the IRS may now be looking at bank levies, wage garnishments, business seizures, payroll tax enforcement, or aggressive asset collection. But here's the important part. A revenue officer assignment does not automatically mean you are out of options. What matters now is how quickly and how intelligently you respond. Today, I'm going to explain what an IRS revenue officer actually is, what powers they have, the biggest mistakes taxpayers make, and what you should do immediately if one has been assigned to your case. I am Chad Silver, tax attorney and founder of Silver Tax Group. For more than 20 years, we have helped individuals and businesses resolve serious IRS collection matters, revenue officer cases, payroll tax problems, and tax investigations. If you want straightforward information about dealing with the IRS, subscribe to the channel. Section 1, what is an IRS revenue officer? A lot of people confuse IRS revenue officers with IRS auditors. They are not the same thing. An auditor examines tax returns. A revenue officer is a field collections officer. Their job is to collect unpaid taxes. Unlike automated IRS collection notices, revenue officers are real people assigned directly to your case. They can call you, visit your home, visit your business, request financial records, and initiate enforced collection actions. Generally, revenue officers get assigned when the tax debt is significant, the IRS believes collection is urgent, payroll taxes are involved, multiple years are unfiled, or prior notices were ignored. This is the IRS saying, we are no longer handling this passively. Section 2, what powers does a revenue officer have? Revenue officers have substantial collection authority. They may levy bank accounts, garnish wages, seize accounts receivable, file federal tax liens, or recommend seizure actions in extreme cases. If payroll taxes are involved, they may also pursue something called the Trust Fund Recovery Penalty. That allows the IRS to assess payroll tax liability personally against owners, officers, managers, or anyone responsible for collecting and paying payroll taxes. Revenue officers can also show up at your business unannounced. That surprises many taxpayers. Now, that does not mean they are going to immediately seize assets, but it does mean the IRS is actively evaluating collection options. Section 3, the biggest mistakes taxpayers make. Mistake 1, ignoring the revenue officer. Many taxpayers panic and stop responding entirely. That usually accelerates enforcement. Revenue officers often become more aggressive when they believe a taxpayer is avoiding them. Mistake 2, providing incomplete or inaccurate financial information. The IRS will compare what you provide against bank records, tax filings, public records, payroll data, and financial statements. Inconsistencies create credibility problems very quickly. Mistake 3, waiting too long to get help. The earlier a case is managed strategically, the more options are usually available. Section 4, what should you do immediately? First, do not ignore the revenue officer. Second, determine exactly what the IRS is trying to collect. This may include unfiled returns, payroll taxes, income taxes, penalties, or all of the above. Third, get organized. You need IRS notices, tax returns, bank statements, payroll records, and current financial information. Fourth, understand your resolution options. Depending on the case, those may include installment agreements, currently not collectible status, offer in compromise, penalty abatement, or strategic enforcement delays while compliance issues are corrected. Section 5, why representation changes everything. One of the biggest advantages of hiring a tax attorney early is this. Once the IRS revenue officer knows you are represented, the revenue officer generally must communicate through your attorney instead of directly contacting you. That changes the dynamic significantly. Instead of dealing with surprise phone calls, unexpected visits, or direct pressure from the IRS, your attorney becomes the point of contact. An experienced tax attorney can control communication, manage deadlines, protect sensitive disclosures, negotiate strategically, and prevent taxpayers from making damaging statements or admissions. In many cases, simply getting qualified representation involved early helps reduce panic, slow escalation, and create a structured plan for resolving the case. Revenue officers often communicate very differently once experienced counsel steps into the matter. Section 6. Can this become criminal? Most revenue officer cases stay civil, but certain facts can increase criminal risk. Examples include intentionally hiding assets, moving money to avoid collection, payroll tax theft, filing false documents, or repeated noncompliance over many years. Sometimes revenue officers coordinate with IRS criminal investigation. That is why strategy and communication matter from the beginning. An IRS revenue officer assignment is serious, but serious does not mean hopeless. The worst thing you can do is ignore the situation and allow the IRS to control the timeline. At Silver Tax Group, we help individuals and businesses handle revenue officer cases, payroll tax problems, collection enforcement, and high-risk IRS matters every day. If you have been assigned a revenue officer and want to understand your options before things escalate further, contact Silver Tax Group for a confidential consultation. Call us at 855-900-1040 or visit silvertaxgroup.com. If this video helped you, subscribe, hit like, and leave your questions below in the comments section.